On today's video, I am going to teach you how to double your profits on a single trade. Listen, this is a little trick that I use, and it is very powerful. The reason that it is powerful because I'm able to double my profits, but yet I am not risking no more than I typically like to risk, right, within a single trade. So, what do I mean by double my profits within a single trade? It simply means that let's say that I know many of you know about 1-to-1s, 1-to-2 RRs, 1-to-3 RRs, right? But imagine that every time price got to your 1-to-1, you were actually making a 1-to-2. Or if price got to your 1-to-2, your account is actually saying that on this particular trade that you're actually up a 1-to-4. You're simply just doubling what you would typically do at at a certain price or at a certain RR. And if you want to use, let's say numbers, right? A profit target that you like to have. Like I know some of you might to have like a staggered number that you use, right? Before you exit a particular trade, whether that's $100, that's $200. But let's say that you were risking $100 on a single trade. But yet, once the price got to your 1-to-1, you were actually up $200. And it's the same exact move that it would be on the 1-to-1. Nothing extra, nothing special, just a typical 1-to-1 move, but you're actually up double that 1-to-1 or 2-to-1 or whatever that RR is for you. All right, so look, we're just gonna jump straight to the screen. I just wanted to get, again, I just wanted to share this tip. I feel like, this might be helpful for some of you out there. So we're going to get to the screen. I'm actually going to go over gold zone. All right, so what we're going to go over is Nasdaq, y'all. So whenever I am, doing the double profit that I was just telling you guys about, typically I like to do that either pre-market or I like to do it after New York session opens, right? So maybe it's 9:45 or 10 o'clock, just depending on how market is moving. If it has kind of slowed down a little bit and we kind of beat the 9:30 to 9:40 range, this is where this is very powerful. Okay, so what I'm going to do is I'm going to actually show you the go zone, which is my trading strategy. I'm going to show you very simple, very, very simple. I'm going to just simply show you how I do this completely. All right, so from this video you're going to be able to not only take away how to double your profits within a particular trade, but also this gold zone strategy that I'm always talking about, y'all, that I'm always talking about. So I'm actually going to show you trades that we actually caught this morning in 48 trading signal room. So if you want to join that, everything will be in the description below. Okay, I actually have two tiers now, right? I have the gold zone, and then I also have another tier, which is you guys get my playbook. So my trading playbook every morning. You're going to get, oh my God, you're going to get my exact, you will be getting my exact playbook from morning to morning of these particular trades that I'm doing. So the same setup I'm about to show you, these are kind of setups I'll be sending you each morning, Monday through Friday. All right. So you can go to the website and check it out. So first thing, whenever you are trading gold zone, first thing you have to establish is what's the rhythm of the market? What is price doing right now? What are we seeing consistently right now? And first thing that I notice is we are in an uptrend, right? I am on the 15-minute time frame. That is what I stay on. That is what I trade on. The 15-minute time frame. I like the 15-minute time frame just because I think it just moves very smoothly, right? A lot of confirmations are actually confirmations. Now, with the gold zones, we typically don't necessarily always trade based upon confirmation, but we typically get a nice, strong bounce because a lot of the gold zones play as trampoline areas, and I'm going to show you right now. Now, first thing I am seeing is we are in this uptrend right here. We got this, and I'm sure you probably seeing this too, right? You seeing this exact same thing that I'm seeing right now. Okay, now I see that price is respecting here, price is respecting here, price is respecting here. Now at this time it is 8:15, and we're not actually looking at the market just quite yet. So the time I started looking at the market was literally on this 8:30 candle right here, in this 8:40 range. So let's just start from here, right? Because I typically start looking at my analysis around 8:40. So
on this particular day, which is today, I got in while this thing was actively moving. Okay. So once I seen that we broke, second, my next start is phase three, right? So what does phase three say? Now notice, uh, I didn't go through my phases yet, right? So I'll just so if you are new to the channel, phase one is here where price is respecting, right? So anything that is doing this is phase one, right? So let's just imagine that price came here and we went for a long position. That would be a phase one. Phase two says we got a nice break, we got a nice close beneath our gold zone. Let's be patient and let price come back up here for a phase two for a pushback now, right? Now, this is where we get into Pac-Man's mouth. So currently we are in Pac-Man's mouth, which is also known as phase three. Phase three would be down here. So Kirby, how do you find the phase three? Anytime you have an uptrend or even a downtrend, you go to the foundation. What started this uptrend? This area right here is what started this. Without this, you don't have this. This is the foundation. This is the floor. So what you're simply going to do is you're going to get a trend line or a rectangle like I like to use, and you're going to simply bring it straight across here. And so what you've now created is essentially something that looks like a Pac-Man's mouth. Y'all, this is something I made up. This is not no real technical trading term, but it is my trading term, right? And maybe you can adopt it too, all right? So we have this nice Pac-Man's mouth going on. So Kirby, what do you do at this point? What am I looking for at this point? I am simply looking for our two key levels. I only want to trade something either back at the gold zone, or I want to trade something which is phase two, or I want to trade something at phase three. I don't want anything between this area here. This area here is like a dead zone, right? I want to be patient and let price come to this key level, back up to this key level, or price come down to this key level, right? Now, Kirby, why do you want to do that? Because at this point, price could, I believe that some of us are really good traders, right? But sometimes we take bad entries simply because it's not that you've seen it or you read something wrong. It's just how price is getting to the destination you want to get there. And so before it gets to the destination that you know it's going to go, it first comes back and stump you out. So the way that that has, the way that, now again, this does happen to me sometimes. Like, of course, sometimes price may give it a long wick and it stumps us out. But I was able to cut down a lot of that by simply trading at key levels, right? Where price strongly wants to respect, which is our gold zone. I actually took a trade today on Nasdaq, and it actually went, on US 30, that it actually went against me. Why? Because I decided to trade in the dead zone, and I knew better. But I am going to focus on, and I'll actually go over US 30 as well in the same kind of setup, y'all. But we want to just trade the thing here. So if price comes back up to this key level here, we want to, my first thought is I want to short this, right? Price comes down here, my first thought is I want to go long here. Simple as that, y'all. Literally, it's literally that simple. We're not literally that simple. So I can go ahead and I'm going to create my short tool right here. Boom. So right now we're just being patient. Right now it is 8:30. Boom. Price pushes back up to the gold zone. Now, price did not come all the way to the gold zone like I would like it to, but let's just pretend it did on this particular trade. All right. But it did not come all the way back. It got very close. It was like 4 points away. So when I first seen this, I was like, oh man. But it's all good. This is perfect. This is still a really, really good setup. It just simply didn't come all the way up to the gold zone. So now let's discuss on how you can simply make double your profits. All right. So Nasdaq, y'all, I risk 30 points every trade. Right? Every trade I am risking 30 points, whether it's a short position, long position, I am risking 30 points. Right? That my stop loss is 30 points. Right? But a way that I have been able to make a lot more profits a lot faster and double my profits literally is by simply taking two positions. Taking two positions at the same key level. Very simple, right? I know y'all looking for something that's like extravagant. Oh my God, no, take two positions. But here's the thing. You want to be able to take two positions, but you don't want to risk more than what you typically risk, right? So what you can simply do is like, let's just say that price came down. I'm going to just drag this down a little bit. let's say that price did come down to, or come up to our exact gold zone, right? Got very close, and you decided, hey, I want to get in for a short position. Well, instead of you risking 30 points, you're going to simply slide this down to 15, right? So now your stop loss is here. It is a tighter stop loss. So what that means is you're going to have to simply execute. Simple as that. You have to execute, okay? So what you can do is you can, if you know you have a target, like for gold zone, I know where I'm going at with the gold zone. I know what I'm looking for. So what I can do is at this position, I can set something called a sell limit. I'm going to repeat that. You can set a sell limit at this key level right here. So as soon as price gets to your gold zone, it's going to automatically trigger you in, right? So you can already have your stop loss at 15. Right? But let's just say that your typical, like, you like to risk 40 points. Well, guess what? Your stop loss will be 20, right? Simple as that. Your stop loss is going to be 20. Now you're going to, mind you, your lot size, your contract size, everything stays the same. All you're doing is you just decided, hey, instead of me risking my typical 30 or 40, I'm simply going to risk 15 or 20, right? As far as points, but my lot size stays the same, all right? So boom, let's just imagine you got triggered in. Boom, you are now triggered into this market. As soon as you start seeing price, even if you don't want to wait, but if you start seeing price go your direction, what you can simply do is jump straight in for another trade to the downside. So boom, you'll do something like this. Let's say that price came down here a little bit. Boom. You're going to simply move this stop loss. Same thing, y'all. You're going to move it to 15 if you are risking 30. All right, so you're going to simply move this to 15 if you're risking 30. And I'm just going to drag this back down to 15. Notice, this 15 might be a little bit higher if you got in a little bit later on the second trade. So what you could do is you can have 2 sell limits up, right? 2 sell limits or 2 buy limits, or you could simply just see what this price is doing, because there are going to be times where you just see price just fly, right? And you're like, okay, I don't want to take a second trade. Here's the cool part. If you don't take a second trade, you're only going to be losing half of what you're risking. So if you're risking $100, you're only going to be losing 15, y'all. You're only going to be not 15. I'm sorry. You're only going to be losing 50. Now I can hear somebody saying right now, well, the problem is, what if it just comes up and it doesn't come all the way to 30 and then it reverse and I just lost the trade for no reason? Yes, that is the risk that you do run, right? So you do run that risk, right? But that is where it comes down to your strategy. That's why strategy is so important. That's why trading at key levels is so important, because trading at key levels play as magnet zones. Now, even in saying that, there will be times where you simply get, price simply breaks the gold zone. That's perfectly fine. We just look to reverse position. Let's see what price is about to do next. And that's another reason why you start before market opens or after market has been open for a while. Why? Because the gold zones play more as trampoline areas at those particular times, because it's not as much volatility in the market, right? But it's still enough for you to make really, really good money, right? Really, really good money on these trades, all right? So again, let's say you move this to 15, and you over here, you slid this over too, right? Well, what you can simply do at this point is, let's say that price comes down to your 1-to-1. Well, once you've seen price come down to your 1-to-1, which is right here, guess what? You're actually up. I'm sorry. Let's slide it back down to 30. Our 1-to-1 is 30, y'all. Our 1-to-1, our real 1-to-1 is 30. All right. Well, once price come down to this 1-to-1, guess what? You're actually up 2-to-1. Why? Because you took 2 positions, but yet your stop loss is just simply tighter. So if price does go against you, you only lost a 1-to-1 like you typically do anyway, right? But on the flip side, if price comes down to your 1-to-1, like normal, there's nothing extra going on. You just simply got into a good trade. Price comes down. Well, guess what? Instead of it just being a 1-to-1 when it's going your direction, you're actually up a 2-to-1, right? So how cool is that? You're actually up a 2-to-1 on a simple one-to-one move, right? How often have you hit a one-to-one and you stayed in the trade and it eventually went against you because you wanted to get that 2-to-1? Well, this is a cheat code on how you can actually get to a 2-to-1, but yet keep your one-to-one the same, all right? Now, another cool part is if you're trading at these trampoline areas where you simply get small bounces, y'all, a 15-point move on Nasdaq is literally nothing. But guess what? This nothing is something whenever you're doing this. Why? Because as soon as if it just gets to 15, which is half of your one-to-one, half of my one-to-one, I'm already up a one-to-one. So if it just moves my direction by 15 points, which is half of my one-to-one, I'm already up in profit a one-to-one. So at that point, y'all, what I could simply do if I wanted to, I could, if I want to, let's say that price does come all the way down to my one-to-one. I could close one trade out, go ahead and lock in a whole trade and let the other one keep running. I could simply move my stop loss down to break even if I wanted to. There's so many different things I can do at this point. Like, I have the advantage right now. So as soon as price comes your direction, you can start adjusting if you want to. Maybe you want to have it just above this wick here. You can do whatever you want to do as soon as it starts to go in your favor. Why? Because of how you are trading, and you're going to see so much more profits, so much more faster. All right, I'm telling you. So this is so powerful, y'all. Okay, so now I'm going to show you another example on this same exact trade. So matter of fact, let's leave this up here. Let's leave this up here. All right, just so we can see what price would have done. Boom, boom, boom. Okay, price came all the way down. Now this came down here. This is a typically this would be a 4-to-1, right? This would typically be a 4-to-1, right? But because of how we are trading, this 4-to-1 actually would be an 8-to-1, which is a huge difference. An 8-to-1 on this particular trade. All right, 8-to-1. This, or for, I know some of y'all don't like hearing 8-to-1. Let me just say a 1-to-8, right? So 1-to-8. This would be insane from this gold zone move. Now, the trade that I was able to catch this morning by the grace of God and us in the signal room is this right here. I already had it planned out that price comes to this key level. I want to go long. As simple as that. And guess what? Stop loss is at 15. This is 30. Boom. This is 15. And why am I'm happy with this? I'm happy with this because gold zone area is right here, right? And so I still got plenty of room for price to come down in order for it to stump me out, right? And now at this candle right here, it is 9:30, right? You remember I told you that I don't want to get in. Right at 9:30 if I'm going to trade this way. If I was to get into a trade right at 9:30, then I would have my stop loss typically at 30, right? Because there is a lot more volatility, there's a lot more fake outs, a lot of more spikes, and just stuff like that. So you just want to use discernment whenever you are doing this, right? But I know that, okay, 9:30 candle was right there, so this candle is like a 9:45 candle. This is perfect. I can deal with this, right? So boom. Price spikes down straight to the gold zone, y'all. Straight to the gold zone. Stop loss is 15. Guess what? I took 2 positions here. Look at this. Wow. 2 positions was taken here. Both at 15. Right? Price came up. Boom. This is a 1-to-1. Remember I told you, my 1-to-1, though, is actually a 2-to-1. All right? So price did come up here to this 1-to-1. It just kind of came back down. But boom, this next candle. Before we see this breakout happen down here, y'all, price did push up first. So price actually did push all the way up here before this breakout did occur to the downside. And maybe you guys seen this particular trade today. Now, this is a 3-to-1. So for me and for you, whenever you start doing this, this would, if you decide to start doing this, this would actually be a 6-to-1 on this small Nasdaq move, y'all. This is not a big move at all. But guess what? This move is a 6-to-1 or a 1-to-6, right? Which is very powerful, very powerful, all right? Now, boom. Y'all, that is simply how you're going to double it. You're simply going to just take 2 positions, cut your stop loss in half. Again, whatever your stop loss may be. Now, if you already have a stop loss that's at like 15, and you're trying to cut it down to like 7. Now that is a little more difficult, right? You're not really giving yourself, you have to be absolutely perfect on your entries, right? I know some of you guys like to trade like that. I personally don't. I kind of like to give I like to give myself some room of for error, right? Or also for a market just to, it might fluctuate some. So I want to just give it a little bit more room to let it do what it do. And that's why I'm comfortable with taking these 2 positions. Again, I do not take these 2 positions like this whenever it is 9:30 on the dot. I will do 35 just because there are a lot more spikes. Unless it is just something perfect. I'm like, you know what? I'm just going to do it, right? So let's jump to US 30 real fast, and I'm going to go over it really quickly so you can see the same thing. So as you can see here, US 30 price did spike. Now my US 30 is 35 typically, right? So what's that? That's about 17 or so. That's about 17 or so. So let's line this up perfect. So boom. Now on this one, it got very, very close on this particular trade. Very, very close on this US 30 trade. Right? Y'all. Got a little interruption. Okay. So price got very, very close on this US 34 giving us stumped out. But we took 2 positions here. Mind you, and once you take the first position, you can be patient on that second position. You don't have to just fly and rush into the second position, right? But what happens here? Boom, look at that push-up, y'all. Absolutely insane push-up. And this would have been a 10 to 1. Very, very, listen, these are simple moves. And I know you catch moves like this all the time. But what if you just started cutting your stop loss down a little bit? Leaving your lot size the same, cut your stop loss shorter. But y'all, that is going to be it. I just wanted to give y'all that tip. And so God bless y'all. God bless y'all. I'll see y'all next video. Bye.